thrive, yeah. I think that we've already known. Came in down 4% year over year. Still beat estimates though. Uh, Reality Labs operating loss 3.67 billion versus 3.09 billion. That's basically their Oculus, Metaverse, Horizon World segment. Uh, their monthly active users came in at a slight miss. Their daily active users beat by a big margin. EPS missed, partly due to the Reality Labs operating loss. But so yeah, guidance missed too. Uh, Guidance came in high end at what the street was expecting. So it's not complete miss, but uh, it's not that it's not that great. I do think it is an overreaction, though. I think buy all the way, buy this dip. However, it does make you do moderate your forecasts a bit, starting with earnings, as they did say that they're going to be spending. Mark Zuckerberg did say that he's going to be spending a lot more on the metaverse next year, and that is going to cost in terms of income. Yeah, it's cost 10 billion in 2021, and I believe 9 billion in 2022 so far. And with 1 quarter to go, it's probably going to be around 13, 14 billion. Uh, some shareholders, notable shareholders like Brad Gertzner, he actually sent an open letter calling for Mark Zuckerberg to put a cap of $5 billion in spending for the metaverse every year, and to reduce employee headcount, saying that Meta is overstaffed. I think that the bigger part of this dip is due to investors being concerned over the spending on its metaverse, and also the fact that Oculus sales declined, Reality Labs sales declined 40% sequentially year over year. Uh, Here, yeah. All right, so 49% drop of revenue in its Reality Labs segment. People are just worried that the metaverse is never going to catch on. I do think that they shouldn't be spending this much on the metaverse during times like these, but I do still trust in Mark Zuckerberg's judgment. He, after all, was the one who founded Facebook, who made these great products. You could say the Winklevoss brothers, but he really just brought it and scaled it and uh, made it survive. I think this warrants a 5% dip, not a 20% dip. Here, I'll show you a model. So this I actually made this more conservative than what I usually do. $186 fair value, after hours price 104, discount rate 13%, treasury yield 4, which implies a 9% equity risk premium. Uh, Wide moat in my framework, high uncertainty. Uh, so with its free cash flow, I used 26%. I might have to change that a bit lower after this. Free cash flow right now is 36 billion trailing. 13.37. I would have to cut that to like 22 and make that like, yeah, that looks good. So probably 180 still, yeah, 184. Revenue declined 2% year over year. That's actually lower than what analysts model, 2%. Uh, I basically model for them to fall back to a 5% terminal growth rate over in 10 years, 2032. This model actually doesn't like assumes the metaverse generates them no revenue at all. It basically assumes that like Reality Labs doesn't really turn profitable. It's just, which is not true in my opinion. But so for the next 5 years, 3, 4, 5, I used mostly analyst estimates. I toned down this one to be in line with what the market's saying today. And then I just did a 10, 10, 8, 8, 8, 5, 5, 5 for Facebook. I do think that in reality, I'll just show you, this is more what it's going to look like. Just, this might be a bit optimistic, but this is what I think it could look like. Just like, with the metaverse sales, I don't think that their growth would necessarily slow down as fast. I might be too much of a bull on the metaverse, but I do think it's a great concept. It's just that, yeah, their Horizon product right now kind of does suck, uh, but with with the amount that they're spending, like 12 billion a year, eventually, it is gonna eventually, yep, fair value, 300. That's revenue reaches 1.6 trillion. That might be a bit optimistic, but Walmart revenue, yeah, 572 billion. Walmart's has the most revenue, so that. However, by 2050, I do think that let's tone it down a little bit, but I think that's somewhere in the range of where I think it. And with a mega cap like Facebook, I really only need a 20-30% margin for me to buy, and this is giving me like 60-70% margin. Uh, Here I could yep, that's basically the best I could do. I could assume here to be more conservative, I'll assume a 28% terminal free cash flow rate, as making VR headsets probably is slightly lower margin than social media apps. I'm not familiar with Google Sheets. I usually use Excel. You can see that's imported from Excel. All right, yeah, it doesn't matter. Does free cash flow doesn't really change it that much unless you make a unless you make a big change, cause like let's just say bump this to 20. Right now it's 314. That changes to 359. Let's say I 359 billion. Let's say I turn this down to 15. It changes in half, of course, but like, yeah. Uh, I just think it's an overreaction. What else can you say? It's I think people are way too pessimistic on the metaverse right now. It always takes time. It takes time to yeah, money pit. That's what they're just saying right now. It takes time to build a new product, and a new product that you don't have any experience in. Facebook's a social media company, not a gaming company. It takes time. It takes time to hire the right people. It takes time to build the product, because the CEO is not specialized in Mark Zuckerberg. He's not a specialist in video games or in virtual reality. He's just a social media executive. So I do think that eventually, while they're spending maybe pretty inefficient right now, eventually they are going to come out with a great product and they're going to make their headsets more affordable. As the goal of their headsets would be more to. I would think that Costco, their memberships, that's how they make money. They sell their stuff basically just like at like a low markup. Like you can buy stuff in Costco for like sometimes like 30-40%, 30% less than what you could get like at a retailer, at a normal retailer. Like it's crazy, because basically what they trying to make money off membership sales and stuff like that. I think Facebook could do a similar thing with Oculus. They could sell headsets. Let's just say production cost 500, sell for like 750 instead of selling it for like 1500, and then in order to get more people using virtual reality and make money through their software, which is right now Horizon Worlds, but eventually is going to expand as they are spending $12 billion. Facebook is probably a bit more high risk than most other social media companies, than most other big mega caps, but there is a lot of potential in Facebook considering how beaten down it is. Its price to earnings right now is 10. After I was going to be 8. All right. Walmart price to earnings 28. So you think Walmart deserves triple the PE? Is its growth triple than? Is it? Is that triple than Facebook? Is that triple? No, it's less. It's insane right now. And do remember that even though this doesn't look that much, this is with a 13% equity risk premium, a 9% equity risk premium, 13% discount rate. Let's assume a 5.6% equity risk premium. That's what most analysts assume. Let's just assume a 6% for sake of 532. In a lower interest environment where treasury yields are at 2%, 982. That's not gonna happen in a while because treasury yields are gonna stay above 2% for a long time to come. 4.04% right now, but Facebook seems like it has the potential to 10x. I think in 5 years. That might be overly optimistic, but if its metaverse thing turns out, it has the potential. Thanks for watching this Maximum Profits.